Hello and welcome to another episode of Canadian Stacker. Once again, I'm on the Ottawa, the usual spot, Lower Ostroms. Today I wanted to talk about, something that's transpiring that's looking uglier and uglier by the day, and that is the U.S. bond market. Right now we've got some big stuff happening. We got the Chinese selling off huge amounts of U.S. bonds. The Japanese selling off huge amounts of U.S. bonds, and the U.S. is selling off stuff off of their balance sheet. These are the three largest basically holders of U.S. bonds, and they're all selling. And what's that do? It's going to drive up interest rates. I've been saying for a long time that I see one or two more hikes this year, and then at least a full percentage point next year. It's looking more ugly by the day. What do I see happening? Now remember, I'm just a dude down by the river living his life. I am not giving any financial advice. I know absolutely nothing. I'm just a guy that's run several smaller businesses and helped run a larger trucking company. I've lived through a couple of economic downturns. I've lived through the dot-com bubble. I lived through the real estate bubble. And I've been dabbling in the market since 1995, so almost 30 years. And once again, I'm dabbling in the markets, which means I know absolutely nothing. What do I see happening? Well, I see interest rates going higher, and I see basically everybody being told they're not going to be able to borrow anymore unless you have good credit. This is going to kill, like, literally everything that's for borrowing purposes. The U.S. consumer, contrary to popular belief of what all the talking heads are saying, that the U.S. consumer still has money, is absolutely false. If you look at credit card debt, everyone's saying it's $1 trillion, it's $1 trillion. I'm going to tell you something. If you go look in the paperwork behind the shadow stuff that's going on, people that are already in default, because they don't include those in credit card count, it's actually higher. It's like $1.18 trillion. It's just absolute insanity where the levels are at right now. Basically liquidity is now drying up. There's no US dollars to be gotten. Everybody's talking about how the BRICS are going to do something major tomorrow. I don't see how that's going to happen currently. Like, China's dealing with their own blow up of real estate. But what are they going to back their economy with? 90% of people in China believe that owning a home is required in order to get a partner in life. There are less women than men, so men are actively purchasing houses, like apartments and land, like crazy, because in order to get a woman in China, you have to own property. It's a sign of status. So the Chinese market's driven on that. So I view the Chinese government maybe as trying to cool down their market, and they're going to let Evergrande go. They want the prices to drop so the average person can probably buy homes in China. The prices are so inflated right now. So that's going to wreak havoc. And the people that hold the bond debt that's coming due in China, it's American, Canadian, and Western countries that hold the debt. Everybody seems to think that China's the one holding the bag here. They're not holding the bag. It's places like BlackRock that are holding these bags. They're the ones that went in at an all-time high in China in 2021 before all this liquidity crisis crap started happening. My boat's here, so I don't have time, but I'm going to try to finish this one as quick as I can. We all in the West were buying in, and the reason they were buying in is they were being offered absolutely insane valuations on their currency when they put it in, like huge interest returns and massive payments in 2021, and now they're all caught with their pants down, and they're trying to blame the other crap out of China. I'm not saying that they don't have their difficulties over there, because they sure as heck do, but the people that are in problems right now are mostly Western investors. Like, let's look at it from that viewpoint. And what's that going to do? Well, BlackRock has a little under 5% of their investment wealth tied up in China. So, how much money does BlackRock have? Trillions. So it's a large amount, but less than 5%. It's like me saying my play money. I invest my play money, right? I say I invested some play money into crypto. If it's under 5%, it's considered play money. So these BlackRock, this is play money for them. Is it going to be bad? Yeah. Are they going to get their money back from China? Absolutely not. Is Uncle Sam going to bail them out? Probably not. So we're going to take it on the teeth. Not much, my man. Not much. But yeah, that's what's going on. So the bricks tomorrow, we'll see what happens there. If there's something big that comes out, I'll probably do a live stream right away. I'm not on the river tomorrow, but if I see something big, I see the markets going, I'll let you guys know. Silver's been on an uptrend. They put in a firm hard bottom, I think, there yesterday when it bounced and went up. So I see silver staying where it's at for now. It's still under the 200-day moving average, so it could go lower, but we'll see. It's got to put in another 30 cents in order to get back above that 200-day. Right now it's trading below the 200-day, so until I see it bounce above it, I'm still in a bear thinking downward trend for it. And the reason for that is if the Fed hikes interest rates, that's what's going to drive down the price of silver, because when the Fed hikes and silver goes down, when the Fed cuts, silver goes up. But remember, it's kind of counterintuitive too. There are times and places where that doesn't work out like that. So until next time, this has been Canadian Stacker on the Ottawa River. You have yourselves a great day. My boats are coming down now. You know what? I'll stick around until they run. So yeah, so we got a couple of boats on today. Some happy guests running the river. If you ever want to come out and do this, you know, like go to whitewater.ca. I am not the owner of the company. I'm not, this isn't a promotional video for them. I just love my job and I love what I do, and I love sending people down the river to enjoy what the outdoors has to offer. It's just an amazing experience. The Ottawa River this time of year is absolutely outstanding. The water level is a little bit low. Kevin's giving a high sign to the boats, telling them everything's good down here. They gave a high sign up top saying that they're coming. They're going to run tight, like I've told you before. They want to keep it close because when they hit the speed, and they didn't quite get that, but when they hit the line, they separate pretty hard, and it makes it more difficult for them to help each other if there's a problem. So I'll be quiet and I'll let this talk for itself. To be honest, I think tandem is the best experience in a boat, in a raft with a guide and two people in the front. Because everything you hit it hard, and yeah, it's a lot of fun. So like I was saying, until next time, Canadian Stacker out. Have a great day.